GM dealerships across America are suddenly being forced to shut down, consolidate, or walk away altogether. And for the first time in the company's modern history, even loyal dealers are saying they simply can't survive under GM's new demands. This has never happened at this scale before, and the reasons behind these shutdowns are far more explosive than GM wants the public to know. For months, GM insiders have been quietly whispering that the company is in panic mode. Inventory is piling up at levels dealers say they've never seen in their careers. Brand new Silverados, Sierras, Tahoes, Blazers, and even GM's hyped EV models are sitting untouched for months, collecting dust and burning cash. And while GM tries to spin the story, the truth is becoming impossible to hide. Dealerships are drowning financially. Zero buyers, massive carrying costs, and unrealistic targets forced on them by corporate have pushed many stores to the brink. Dealers are coming forward saying they've been warning GM for over a year, telling them that the EV mandates were unsustainable, the inventory levels were unrealistic, and the pressure to meet electrification targets was literally impossible. Yet instead of adjusting, GM doubled down, and now leaked emails from within GM are exposing something shocking. Corporate knew this was coming. They knew the transition costs were too high, they knew dealers couldn't handle $500,000 EV upgrade requirements, and they knew demand wasn't there, but they pushed ahead anyway. The situation is getting so bad that dealers are walking away after decades of partnership. Some are saying GM's electric dreams have turned into financial nightmares. They're being hit with EV inventory they can't sell, expensive charging infrastructure they can't afford, and sales quotas that don't match real-world demand. One dealer even said GM's mandates will destroy small-town dealerships. And now we're watching that prediction come true in real time. And while GM is shutting down stores, guess what Ford, Toyota, and Stellantis are doing? They're moving in. Toyota is opening new stores. Stellantis is slashing prices so aggressively that buyers are switching brands overnight. Ford is quietly scooping up frustrated GM customers who are now looking for something more reliable, more affordable, and easier to maintain. GM's customer loss is quickly becoming Ford's biggest victory, and the dominoes are falling faster than anyone expected. But here's where things get even more shocking. GM's internal financial crisis, the one they aren't talking about publicly, is beginning to spill out into the open. Dealers say GM overproduced massively in 2023 and 2024, flooding them with vehicles they didn't ask for. Now, those same dealers are stuck with inventory sitting for 180 days, 240 days, even 300 days or more, while GM continues to push more shipments onto their lots. With interest rates this high, that inventory becomes poison. Every day a truck sits unsold, the dealer is losing money. Multiply that by hundreds of trucks, SUVs, and EVs, and you get exactly what's happening now. Dealership shutdowns, consolidation, and financial collapse. Some analysts are warning that this could spread fast. Faster than even GM expects. They're saying the entire franchise model could be at risk if GM continues down this path. And the most shocking part, GM's management is acting like this is all part of the plan. Dealers are calling it a cover-up, saying GM is using the shutdowns to silently reshape its dealership network without admitting failure. And the EV side of the story, that's even worse. Dealers say GM's electric strategy has backfired completely. EV mandates, EV quotas, EV infrastructure costs, all of it is hitting dealers at the worst possible time. And the Ultium rollout, which GM said would change the world, has turned into one of the biggest automotive slowdowns in years. EV inventory is ballooning, customers aren't biting, and dealers are paying the price for GM's gamble. Meanwhile, leaked documents show that GM expected dealer closures as early as last year. They knew the EV transition would push many stores underwater, but they moved forward anyway, telling dealers to prepare for an all-electric future, even as demand for EVs started collapsing nationwide. Now, with EV sales cooling, interest rates rising, and consumer confidence falling, GM's entire strategy is starting to crumble. And dealers are the first casualties. GM is now facing a situation it hasn't dealt with in modern history, a widespread collapse of its dealership network. And this raises a question nobody is asking publicly. What happens if this spreads to Chevrolet, GMC, Buick, or Cadillac stores in rural America where dealerships are the lifeline of the brand? What happens if small towns lose their only GM store? What does that do to the brand's loyalty, sales, and long-term survival? And here's the part GM really doesn't want customers to know. Some dealers are saying GM is intentionally letting dealerships fail so it can consolidate the network, reduce overhead, and push more direct EV sales in the future. Because if GM can shrink the number of dealerships, they can tighten control over pricing, inventory, and EV distribution, something they've been aiming for quietly for years. Several dealers have openly accused GM of using the EV transition as an excuse to reshape the entire retail system. They say GM wants fewer dealers, more corporate power, and a more Tesla-like model where they don't have to rely on hundreds of independently owned stores. And now that many dealers are struggling financially, GM simply has to sit back and let the closures happen naturally. But the pushback is getting louder. Dealers are blowing the whistle on GM's unrealistic expectations, saying the company set them up to fail. One leaked internal memo shows GM executives pushing aggressive EV sales targets even after knowing that consumer interest was slowing drastically. Another email reportedly warned that dealers not investing at least $300,000 to $500,000 into EV equipment could be left behind, which many dealers interpreted as a threat rather than guidance. And now, those very stores that refused or were unable to comply are the ones closing their doors. The fallout is becoming undeniable. Some GM stores are reporting that salespeople are leaving for other brands because commission incomes have collapsed. Service departments, once the profit engines of any dealership, are losing business because GM's EV lineup requires far less maintenance, which cuts deep into dealer revenue. And perhaps the biggest blow, customers are losing trust. They're walking onto lots, seeing entire wings of new GM vehicles sitting unsold for months, and wondering what's really going on behind the scenes. Meanwhile, GM continues to put on a brave face publicly, claiming the shutdowns are part of normal market adjustments. But that's not what the numbers show. Independent analysts are now warning that if GM doesn't reverse course soon, this could trigger a chain reaction across the industry. More dealer closures mean fewer service centers. Fewer service centers mean customers move to other brands. And when customers switch brands, they often don't come back. And while GM deals with this meltdown, their competitors are quietly taking advantage. Toyota, the one automaker that resisted the EV rush, is expanding. Their hybrids are selling faster than they can build them. Customers who once bought Chevy or GMC are walking into Toyota showrooms because Toyota has what GM doesn't: available models people actually want right now. Ford, despite its own EV struggles, is winning back truck buyers because the F-150 hybrid and even the gas models feel more familiar, more reliable, and less risky to consumers unsure about GM's direction. Stellantis is slashing prices on Ram and Charger models, pulling thousands of customers away from GM who are shopping purely on affordability. And here's the part GM absolutely does not want getting out. The financials behind these shutdowns reveal a pattern of dealership losses that started long before the closures became public. Some stores were losing hundreds of thousands per month just holding GM inventory. Vehicles sitting 180 to 300 days on lots with no end in sight were crushing floor plan costs. Those costs used to be manageable when interest rates were near zero, but now interest rates are higher than any time in recent memory, and dealers are paying the price. Literally, every unsold SUV becomes a financial anchor, dragging the dealership deeper underwater. And if you think this ends with EVs, think again. ICE models, gas trucks, gas SUVs, even Chevy's bread and butter models are also stacking up. Dealers say GM's production schedules are completely out of sync with reality. Corporate wants to maintain volume for shareholders, but dealers are begging for production cuts. GM refuses, dealers suffer. Then, when they can't carry the cost anymore, they shut down. But it gets even stranger. Multiple industry insiders have reported something alarming happening behind closed doors. GM has allegedly discussed long-term dealership redistribution, which is corporate speak for closing weaker dealerships to concentrate power in larger high-volume stores. But to make that happen without lawsuits, you need voluntary shutdowns, or at least shutdowns that appear voluntary. This is why so many dealers are going quiet as they go under. They've been pressured, cornered, or simply worn down until walking away seems like the only option left. And while all this is happening, GM keeps pushing its all-electric future narrative, but the dealers on the ground are calling it a fantasy. They say GM's EV mandates were designed in boardrooms by executives who don't understand real customers customers, real financing, or real market behavior? One dealer even said, GM is planning a future for a customer that doesn't exist, and the numbers prove it. EVs that were supposed to fly off the lots are instead sitting unsold, discounted, and collecting dust. This EV inventory overflow is the silent killer behind the shutdowns. GM expected explosive growth. Instead, demand flatlined, and dealers got stuck holding the bill for EV chargers, EV technicians, EV equipment, and EV training, all for vehicles they can't move. Some dealers said they needed to sell dozens of EVs per month just to break even on the investment. Instead, they're selling maybe one or two, sometimes none. Meanwhile, competing brands are hammering GM right where it hurts. Toyota is dominating hybrid sales. Ford is doubling down on hybrid trucks. Stellantis is scooping up traditional muscle and truck buyers with aggressive discounts. Even Hyundai and Kia, once considered underdogs, are gaining share rapidly, and this competitive pressure is turning GM's dealership crisis into a full-blown market disadvantage. The danger now is that GM is slipping into a downward spiral that feeds itself. Dealers shut down, customers lose local support, sales decline, inventory piles up, floor plan costs explode, more dealers shut down. Once that cycle starts, it's extremely hard to break. And the biggest question looming over all of this is, what happens if GM loses too many dealers too fast? At some point, the brand's geographic coverage collapses. Customers in entire regions will no longer have local access to GM service or sales. That's not just inconvenient, it's catastrophic for a mass market automaker. Brands survive on accessibility. When you lose that, you lose relevance. And here's the chilling part. Some analysts think GM already knows this. They believe GM is preparing for even more dealership closures in 2025, and possibly preparing new incentives to push dealers deeper into EV commitments, even as dealers are begging for relief. It's a corporate versus retailer tug of war, and right now, GM's decisions are pushing both sides toward a breaking point. This is turning into the perfect storm. Rising interest rates, collapsing EV demand, angry dealers, bloated inventory, and a brand strategy that no longer matches real-world conditions. It's a crisis that GM has never faced before, and it's happening at a speed that even insiders didn't expect. Some experts are saying GM's overconfidence in an all-electric future is coming back to bite them hard. Others believe GM simply misread the market and ignored the warnings. But the biggest question remains, what happens now? What does GM do when an entire network of dealers, the backbone of their business, starts collapsing under their own strategy? What do you do when the very people who sell your vehicles can't survive selling them anymore? And more importantly, is GM being honest about how deep this problem goes? Or is there a much bigger crisis hiding behind these sudden dealership shutdowns? Because the deeper you look, the more this entire situation starts to resemble a slow-motion collapse that GM has been trying to cover with polished press releases and carefully crafted talking points. But the dealers, the people on the front lines, are telling a very different story, and their stories paint a picture of a company that underestimated the market, overestimated its EV momentum, and pushed its retail partners into an impossible situation. Some dealers are even saying they've been instructed not to talk publicly about their shutdowns. They claim GM doesn't want bad press surrounding the closures, especially while they're trying to convince Wall Street that the company is strong, stable, and successfully transitioning into the EV leader of the future. But behind the scenes, dealers are watching millions of dollars in investment evaporate, buildings they financed, inventory they can't sell, charging stations they paid for but barely get used, and most damaging of all, the customers disappearing. Customers aren't dumb. They see dealerships shutting down, they notice declining local availability, and they're starting to ask hard questions. If GM dealerships are closing, what does that mean for warranty work? What about parts availability? What about long-term support? Fear spreads fast, faster than GM can respond, and every dealership that closes sends a shockwave through nearby communities. What's even more alarming is that this isn't isolated to just a handful of failing stores. This is happening across multiple states. Midwest towns losing their only Chevrolet dealer, southern markets watching Buick and GMC stores walk away, and suburban areas seeing Cadillac dealerships quietly shut down after refusing to spend hundreds of thousands on EV upgrades. These closures are not random. They follow a clear pattern. Dealers who can't meet GM's EV demands, dealers crushing under inventory debt, and dealers refusing choosing to play along with GM's aggressive electrification schedule are the ones disappearing first. And here's where it gets even more unsettling. Analysts believe that GM's internal leadership is deeply divided right now. Some executives still believe GM must go all in on EVs no matter the cost. Others are warning that consumer demand simply isn't there, and forcing dealers to carry the burden is backfiring. This internal tension is leaking out through these shutdowns. GM is pushing toward a future that its own dealers are not ready or willing to support. Meanwhile, industry insiders are reporting something that should terrify GM shareholders. Third-party financial data shows that GM dealers have some of the highest floor plan expenses in the entire industry right now. High interest rates combined with overproduced inventory mean dealers are paying thousands of dollars every week just to sit on vehicles that aren't moving. When your revenue drops but your expenses skyrocket, shutdown becomes the only option. It's not that these dealers wanted to close. They literally couldn't survive another month. And here's the twist. While GM's network contracts, competitors are aggressively expanding their footprint. Toyota just approved multiple new dealership expansions. Hyundai and Kia are adding new stores across key US regions. Even Ford, with its own EV missteps, is maintaining a more stable dealer base because they allowed dealers to partially opt out of costly EV investments. GM didn't. GM forced the all-or-nothing approach. Now the nothing is turning into dealership shutdowns at a rate the company didn't anticipate. The most shocking revelation, however, comes from financial advisors working with GM dealerships. They say the shutdown wave is just beginning. According to them, dozens more GM dealers are signaling they might walk away in the next year if conditions don't improve. Some are already preparing exit strategies, some are merging with competitors, and some are simply giving up, saying the GM they partnered with decades ago is not the GM they're dealing with today. The warning signs are everywhere, but GM seems to be ignoring them. They continue producing at high volume. They continue pushing EV mandates. They continue pressuring dealers with unrealistic sales targets. And every day they do, another dealership edges closer to collapse. GM is playing a dangerous game, one that could reshape the entire automotive landscape in ways nobody predicted. Because if GM loses its dealer network, it loses more than just storefronts. It loses market presence. It loses customer trust. It loses long-term reliability perception, and once you lose that, you don't get it back easily, because the truth is, GM's entire identity is built on its dealership network. Those local showrooms are the reason generations of Americans grew up buying Chevy trucks, GMC SUVs, and Buick sedans. They're the reason GM stayed competitive through recessions, oil crises, and foreign competition. But today, those same dealerships are becoming casualties of GM's strategy, and the company is acting like it can simply replace them with EV mandates, online sales funnels, and corporate-controlled distribution. It doesn't work that way. Not in the American market, not yet. And that's why industry experts are sounding the alarm. They're calling this the most dangerous gamble GM has taken in years. Because when your dealers are shutting down, it's not just a financial issue. It's a cultural fracture, a regional collapse, a weakening of the brand's roots in communities that once supported it. Think about it. When a GM dealership closes in a rural town, that town isn't just losing a business. It's losing jobs, tax revenue, service support, and a brand that once felt local and familiar. Some former GM dealers are even warning that this could trigger a loyalty crisis unlike anything GM has ever seen. Once customers switch to Toyota or Ford for service or sales, out of necessity, not preference, they tend to stay there. That's how brand migration works. And every dealership GM loses is another permanent crack in its nationwide customer base. But here's what might be the biggest warning sign yet. Multiple dealership groups are reporting that they're refusing to take new allocations of GM EVs. They're telling GM, stop sending us cars we can't sell. Some are even sending inventory back. That's unheard of. Dealers never reject inventory unless they're in a full-blown crisis. And the craziest part, GM is still pumping out EVs even though the data shows demand cooling off dramatically. Dealers are calling it corporate denial. Analysts are calling it a strategy out of sync with reality. This is why the shutdowns are accelerating. When dealers say, we can't sell your EVs, and GM says, too bad, you must take them, something has to break. And right now, it's the dealerships breaking, not GM corporate. But that might not last forever, because the more dealerships collapse, the more GM risks a full market implosion. And consider this, if GM keeps losing rural and small town dealerships, they lose the heart of American truck buyers. These are Silverado and Sierra customers, not EV buyers. They don't want Ultium batteries. They don't care about GM's futuristic EV roadmap. They want trucks that work, prices they can afford, and dealers they can trust. If those dealerships vanish, GM risks handing its entire truck base directly to Ford and Ram. Meanwhile, Ford is playing chess while GM is playing checkers. Ford allowed dealers to choose their level of EV investment. GM forced a single path. Ford is still selling hybrids and gas models with massive volume. GM threw nearly all its chips into EVs, and now the cracks are showing, and they're widening fast. Behind closed doors, some GM executives reportedly fear that the dealership collapse might force the company to pull back on its EV commitments, not because they want to, but because the dealer network simply cannot support the strategy. You cannot run an all-electric future if your local infrastructure is collapsing at the retail level, and right now that collapse is spreading quietly, quickly, and in ways GM hopes nobody notices. But here's the question every analyst is asking, and every GM dealer is thinking but afraid to say out loud: is GM preparing to shift to a Tesla-style model by letting dealerships die off naturally? Because if they are, this may be the biggest automotive disruption in decades. And if they aren't, then GM may be heading toward a dealership crisis that could become a company crisis. And the scary part, this is only the beginning. If the EV slowdown continues, if consumer demand keeps dropping, GM's inventory problem could explode into a full-blown financial nightmare. And the dealerships shutting down today are just the first warning signs of a much bigger storm forming on the horizon, because what's bubbling beneath the surface isn't just a dealership problem, it's a structural crisis that could shake the entire GM ecosystem. Auto executives, analysts, and even competing brands are quietly saying the same thing. GM misjudged the market at the worst possible time. They bet big on a future that consumers aren't ready for, forced that future onto dealerships that couldn't afford it, and now the entire system is cracking under the pressure.